Hello, this is Manash Patel with IMTF Trade. Today is February 24, 2020. We're doing a video on the market, reason why is the fear has overtaken everything. The markets have gone down 4 or 5% depending on what you're looking at, and a couple of instruments have gone down more due to the virus that's out there. The virus is real, I agree to that. However, there's a huge fear in the market right now, and it's kind of getting really crazy. I'm listening to news reports. People are talking about all kinds of things that are going on as far as the markets are concerned, how the markets could crash, talking about interest rates going up another 3 or 4 times because the economy is going to slow, and various different things out there. And people also saying, don't listen to fundamentals, and then they're saying, look, don't look at the lines and the charts or anything like that. And it's really getting absurd. A lot of things, fear has pretty much hit people, and you can't really make trading decisions based on fear at all. So you really need to look at the charts and look to see exactly what's going on. Believe it or not, the charts did indicate this market would go for a correction right now, and I'm going to show you exactly where that was seen, and you could see exactly where the next levels are that the markets can go to as far as bottoming out, whether it's at the bottom now or if it has further move to go and so forth. So let's let the charts do the talking for us instead of listening to people and getting fear and stuff like that out there. Okay, so before we begin, here's our normal disclaimer to state this is for education and use only. We're not soliciting you to buy or selling a particular instrument. If you do so, you're doing that at your own risk. All information is owned by EII Capital, cannot be copied or distributed without our permission. Today, we're going to use TradingView for our charting, and that way we could see exactly what's going on with the market. So let's go straight to the charts and see exactly what's going on and go from there. The very first thing we're going to look at is the VIX index, which is the volatility for the S&P 500. Remember, this has an inverse relationship to the S&P 500. So if the VIX is going up, that means volatility is going up and the markets are going down. We basically have been putting out tons of videos for years and years now how the VIX could sit there and forecast the markets before price action actually takes place. Okay, and if you notice in the last couple of videos or blogs we've done, we specify 2 zones here. This bottom zone here, which is basically from the support to 1210 to 1810, is basically when the markets are basically bullish trending. When the markets are bearish trending, it's basically from 1810 to 2310. When the markets are here at this support here, that basically means the markets are overbought, and it could begin to a point where they're very toppy. So at that point, you want to be very careful in buying new positions at this point. And any existing positions that you have, you want to start protecting them, especially when you get there. Reason why is the markets could sit there and bounce off the support to start go up, which means basically the stock markets would go down. And that's exactly what happened here. You had a movement here, you finally got to this level here. And this is the midpoint right here. When you're here, right here, we're in neutral territory where things are consolidating, and you kind of want to see the bias that's going forward. So this week here, we closed above that support. So we had a high probability that we could have possibly started a bearish trend January 27, 2020. However, the following week, it did not follow through, where price closed right back below that resistance level. And then at that point, you still had, now you had a high probability to come back down here. 3 weeks ago, you came down, you were still continuing to come down. The markets were going up, which is a good sign for the markets to kind of recover and to come back here. Last week, all of a sudden, instead of keep on going down, we sat there and we went up, and we actually hit this resistance line again, which is not a good sign at all. It was a very clear sign last week that basically how we hit this resistance sign here, we had a high probability that we're going to sit there and go back up, which basically means the market this week had a high probability to go down. And the reason why is that price never should have sat there. Once it came here, it should have came here. Instead, it came and touched this level here, which was not a good sign at all. So the VIX was very indicating towards the end of last week, a very high probability that this week we could sit there and go down, and basically the VIX would go up, and it did. Now this movement here that occurred today, is pretty big. Yes, it is. And it basically hit that resistance level here. Remember, this week is not done yet at all. Okay, so anything can happen by the end of the week. Markets could go down further. If they go down further, that means we'll pretty much have a high probability to come back to this resistance level right there. And once we get to this resistance level here, then we possibly can sit there and bottom out. If the markets go up, then we're going to sit there and have a high probability for the VIX to sit there and come back to this support. So we have to wait and see exactly what's going on. And you could kind of see here on a 4-hour chart, which you can kind of get into more details, exactly what's going on here. So you could see the level here. We closed above it here. As long as we maintain this support here, the markets can still keep on going up, and you could see we're in a very overextended state here, and we could still keep on going up moving forward. Let's look at the E-mini S&P 500 futures now. Here's the E-mini S&P 500 futures, and you could see here from last October to now, we pretty much have gone up 19%, which is a full-blown trend. This downward movement that you saw today is very minor compared to the upward movement. So I have no idea why people are panicking at all. I understand the virus is big globally, but at this point, there's no effect on the markets right now, and it should not. People are sitting there panicking when they shouldn't be. So you need to sit there and be patiently and wait to see exactly what's going on with these charts. And it doesn't mean just because we sat there and dropped 4 or 5% that the stock markets are going to crash. If you sit there and zoom in and you look at these crosses, there are multiple time frame supports. So what you do is you just sit there and mark these lines here and wait for price to get there, and then you look for some hesitation. If there hesitates, then you know it's going to hold. If it doesn't, then you know it's going to get to the next level. And if you look here, there's a big gap between there and there. So these are the two levels here that basically the S&P 500 can get to on the next one. We kind of held this level here, which is a 32.34. And if we sit there and break that later on this week or next couple of weeks, then we do have a high probability get to 31.08. But these are levels here that we're waiting for sit there for the markets to show us a sign that they could possibly bottom out. So you just sit there and patiently wait for things to happen and go from there. Okay. Here is a daily time frame here for the market. Let me show you this. You could see this was going up, up, up. You could see this was a nice trend going up. We had a stop out here, which is going for a pullback. Then it continued, and it had still a high probability it could continue. However, there were clear signs here before that this market was starting to get weak. And you could see that very clearly on the 4-hour too. Because you could see this upward movement up here. Okay. And then you could see here, it just kind of started getting toppy up here. And you could see it clearly here. When we retest this high right there, it did not follow through at all. Then you had a big volatility bar right there, and then you went into the cloud here. When you went into the cloud here, this is a clear indication that this market here did not have any juice to sit there and keep on going up, and it was going to have an issue in going up. So it was either going to consolidate or start a bearish trend, and unfortunately it started a bearish trend with volatility. Okay, so this is a quick summary on the market. We will do a final video towards the end of the week when things kind of settle down and we see exactly what's going on. But I just wanted to quickly put out a video because I'm listening to TV and hearing all kinds of ridiculous things on there. So I just wanted to show people from the charts that you can see exactly what's going on, and you need to patiently wait for price to get the key support resistance levels, see if they hold. If they don't, then it's going to go on into the next ones. And that's basically how you trade. Have a good day.